Good evening, everybody. Michael Silva here. You're watching the Stock Market Brief Show. This is where we navigate these financial markets through the lens of technical and intramarket analysis. Today, we're going to be diving into what really took place in the market. We saw quite a bit of volatility, give some insights there, and then also get ready for tomorrow, which we have an important day. It is CPI day, and we'll talk about what the market's pricing in as far as moves go, implied volatility. Now, looking at the SPY from an intraday basis, we did see quite the reclaim there from the lows. We saw a big move from volatility to the downside. We saw it big from the upside. And I tried looking for what the news could potentially be. We had some news drop before the big sell-off in regards to the Iran Navy commander. It says Iran has the ability to close the Strait of Hormuz. I don't know if I'm pronouncing that correct. And then over here where we saw this big rally, Fed's Bostic was talking, and we saw this big rip to the upside there. So that could be potential catalysts of why we saw this movement. But if you really just look at the S&P 500 and pay attention to this gamma flip line, this is where things get exaggerated moves. You can get selling into selling, buying into buying, which creates more volatility. This is why I like day trading under this gamma flip line. And we're currently, as it stands, still under that level. And we'll talk about some more of those levels here momentarily. TLT. So bonds caught a nice bid today. Is this like a flight to safety in preparation of the CPI report? I don't know. Maybe. I'm not going to sit here and speculate whether that's true or not. So TLT bonds were up, which drives obviously the yield down. So if you look at the 10-year, it came off today, but it's still 1 day separated from its high for 2024. So are we going to see this potentially head back up? I don't know. I think it's going to be important to watch. The dollar is another important asset from a correlative standpoint, and the dollar was well off the lows today. So you can see here it was down pretty severely, which drove gold to another all-time high, and we'll pull that up momentarily. But then it reclaimed a lot of that level. So we'll see is the dollar prepping for a potential bounce, and if it does bounce, can that put pressure on things like gold, silver, copper, and oil, and various commodities that have been that have been running quite rampant. So if we take a look at gold, right? Gold, pull up GC gold futures. We hit that another high today, which just doesn't seem to be able to slow down. So it's not something that I would be looking to short, and it wouldn't be something that I'd be looking to long right here. I'd look for the consolidations to take place and then go from that standpoint. We saw a nice consolidation here, and we talked about when it was occurring. Since that point, we've just been kind of just trucking along, moving higher. So overall performance in the markets today, rather unchanged, right? The DIA, the Dow Jones, Dow Industrial Diamonds, that remained flat for the day. It was down slightly. IWM is an interesting setup. This was up slightly on the day, 0.39%. But take a look here. I noticed that, we're starting to see a lot of wedge patterns, right? So we see a strong move up, it wedges, it breaks out, wedges, it breaks out, wedges, it breaks out. And then right here, right now, it's actually a pretty clear wedge pattern taking place. So if the market likes what it sees in terms of CPI, we play a breakout, and you can have a pretty tight risk to reward. Maybe it goes to swing for this prior high, or potentially breaks out and we go up to 218, 220 range on a nice move with IWM or small caps. The Qs was up 0.37% on the day, well off the lows, but still trading within the last Thursday's, I believe it was, candle. See, it was an exaggerated day to the downside, and we're just chopping around in it. And then if you look at the SPY, right, we're doing the same thing with the SPY here. SPY, huge down move right over here, big reversal candle. And what have we been doing? We've been trading within that candle, still haven't broke the high to negate this bearish outside day, and we haven't broke the low to get any sort of confirmation. So right now it's a little bit of just a standstill with the markets as we're moving into a highly volatile event. Now, the volatile event is CPI. We're getting it reported. Consensus is right here so core inflation, they're saying, hey, it's going to be 3.7. So it comes in at 3.8. It could be hotter than expected. If it comes in under, right, then that could be potentially good news. What have we been seeing in these like inflationary type assets? They've been rising. It's kind of leading a lot of people to believe that inflation could come in hotter than expected. But we'll see if that's actually the case. It's too hard to speculate. We'll see how the market digests the news, and then we'll go from there. Inflation rate year over year is looking at 3.4%. Okay, so that's going to be the big stuff there. As far as gamma exposure goes, we are in negative gamma territory as it stands right now. We're basically like level and flat. So this selling can beget selling. We'll see if that updates in the morning, and then buying begets buying, where we can see these kind of extreme rallies. Now, 5250 is going to be our local resistance. 5200 is going to be the local support. And you can see that more clear here looking at this SPX and that gamma chart, where 5250 is right here. And it's going to be hard. Anything under this is not really a good sign for the markets. You want to be above 5250, and then you want to start to see traders reaching out further, and that can open the door to come hit that 5300. So if we come hit 5300 in the near future, it's going to be hard for traders to escape this if we're not starting to see them reach out further. It's going to be key to look at that stuff. If you're bullish, it'd be nice to be above 5250. It's been a level that we have not been able to break. You can see the red line going across the screen. Okay, right there, boom. Now it's a blue line. You can see we go up, we come back down, we go down, we go up, we go down, we come back up. We go down dramatically, and we're coming back up into it as it stands right now. We are putting in lower highs, so watch to see if that can potentially change. Now let's talk about what the expected move is going into tomorrow. Today's expected move, we came down on that sell side activity, and we had talked on the live stream that the likelihood of it coming back within the expected move is 68%. If you think of it in terms as a distribution curve, and it pulled back in, it came back to the lower daily, and then Bostic started speaking, and we came right back up to the 5-day moving average. So we're about at the gamma flip line. We're at the 5-day moving average. It's still declining. It's a little bit of a coin toss right now. So it's going to be important to see how this market digests it. But to update you on the expected moves, let's do that right now. The upper level for the SPY is going to be 524.03, 524.03. That's going to be the upper expected move there. And then beneath us is going to be the lower level, and that's going to be 514.61. So 514, put that in right now. 61. So as you can see, this is a large range of risk. We're looking at the SPX, a $46 move, which means the SPY right now is at a $4.71 expected move. So expect risk. The market's saying, hey, we have, there's a 68% probability in terms of distribution. If you think of this in terms of a 1 standard deviation move, we have a 68% probability we'll close within this risk range. And it's very typical to tag one of these levels too. Now, if we get a 2 standard deviation move, we can be going for what? We can be going for one of the upper weekly or lower weekly expected moves. So expect volatility, expect some big moves. The report will come out at 5:30, and then keep 5:30 a.m. Pacific Standard Time, so an hour before the markets open up. And always remember, too, that we have FOMC minutes at 11, and then the next day we have some more data there, too, as well. So overall, just buckle up. A lot of volatility. Be careful out there, and just pay attention. If we're in positive gamma territory, above 5250 would be a more positive sign. And then, obviously, if we're holding below a 5-day moving average and it continues to decline, where we can continue to see all this volatility. And that's all I got for you on today's episode, everybody. Hope it helps out. See you later.